Hi, Courage here from Trading with Tani. In this video, I will show you a stochastic strategy that I've been using in the past recent weeks to get better results in the market. So this strategy simply uses 3 indicators, and I'm going to explain each and every one of these indicators and how you are going to use them, and also I'm going to show you when to buy, when to sell, and where to put your stop losses and take profits. Also, you need to understand that this strategy works on your computer, on your phone, on any device that you are using. But if you are using your phone, I really recommend you to find a computer. If you can't find a computer right now, you can use your phone on landscape mode so that you can see the maximum view of your screen so that you can get better results. So the first indicator that we are going to use on this strategy right here is what is called the stochastic strategy. So the stochastic strategy simply have an oversold and an overbought situation right here, oversold and overbought, right? So if the market comes outside the overbought situation, we're expecting prices to drop right there. And also if the market comes to the downside here where we have the oversold part, we are expecting prices to go back to the upside. So this works exactly as the RSI indicator. So we are not going to be using the RSI here, simply with one reason. The RSI is very slow. When the RSI is moving, it doesn't move as fast as the stochastic, and also the RSI gives a lot of false signals in the market. So the stochastic is a better version that you can use, especially with this strategy right here. So let me explain to you how this strategy works, how we use the stochastic right there. So first of all, we are going to delete this RSI right here, and we are going to be left out with the stochastic, right? So for most people, what they believe with this stochastic right here is just to say, okay, if the market comes down below the oversold right here, and then we see a crossover on the stochastic, we are going to be buying and then expecting prices to go up right there, which is very true. Also, if the market crosses over on the upside right here, we can sell at this point right here and get this small move going to the downside. But there is a problem with one thing about this stochastic strategy right here, and the problem is there is going to be some times when the stochastic comes down right here, and then it comes down right here, we see a crossover, we are expecting prices to go to the upside, and it doesn't, and it keeps going to the downside. And in this case here, you would place a losing trade here, a losing trade here, another losing trade here, another losing trade here, another losing trade right here, another losing trade right here, until you lose like 5 or 6 times in a row, which is not very good. So how do we improve this? How do we improve to say, okay, if the stochastic is like this, and if I want to get maximum value from this strategy? So what we want to do here is we want to make sure that, okay, we want to buy at this oversold right here, but we also want to buy this if the market is already in an uptrend. For example, if we buy here, we'll be buying at this point right here, and we will maximize our profits simply because this market have already been in an uptrend. And also we can see that the stochastic have gone in an oversold situation, and then now the market is likely to be going to the upside right there. Now, to do this, we are going to be adding some indicators right there. I said we are going to use 3 indicators for this. So the indicator that we are going to add next is the moving averages. So we are going to add 2 moving averages. The first one is gonna be the 21 EMA, and then the next one is gonna be the 50 period EMA. So the 21 moving average and then the 50 period moving average is what we are going to be adding right here. So let's set the settings of this. To input, we go to 21. This is an exponential moving average, and I'm just gonna make sure the color is, I'll put red on this one, and then I'll click OK. Now we have the 21 EMA right here, so we need to change this blue one into 50 EMA. So click on settings, and then we click on length, and we put 50, and then we change to EMA. So the EMA reacts a little bit faster than the 21 EMA, right? So now let me show you how you buy or sell. First of all, let's do this. I'm gonna start off right here so that you can see very clearly. So we can see that this market is right here, where the market is in an uptrend. We see the market is moving up, and we want to buy. But when exactly do we buy? We want to wait for this stochastic here to come down here to the oversold and then bounce here, and then we want to see a crossover somewhere at this point right here, and then that's where we will be buying, expecting prices to go up right there. So let's see what happens next. The market started moving. It started moving. Now you can see the stochastic is now below the 20 level, and now it comes down. Now what we are waiting for is, number one, first of all, please remember this. We see that the 21 EMA is above the 50. So if we have the 21, this is the 21 EMA, and here this is the 50. If the 21 EMA is above the 50, it simply means we are already in an uptrend, right? So instead, we are already in an uptrend, but we want to buy. When do we buy? We wait for the stochastic to come to an oversold, and then it bounces. Then that's when we buy. So in this case right here, let's look what happens right here. We are waiting for the crossover, which happens right at this point right here. So the crossover happened right here, and then once we see the crossover, the next thing is to buy. Right, so you can do this on MetaTrader, or you can do this on TradingView. For me, I prefer TradingView, but especially for the purposes of teaching you, but you can do this on any platform that you have. So we have a crossover here. We already bought right here, and then the next thing that we can expect is prices going to our direction. Why? Because number one, we are already in an uptrend. Number two, the stochastic have gone in an oversold situation right here. So make sure you can see this. The stochastic have gone in an oversold situation at this point right here, and then you have a crossover. Once we have that, we can expect prices to go to the upside right there, right? So in this case right here, you would put your stop loss below the lowest point of the reversal right here, and then your take profit should be on the previous level, which is right there. So the market makes a pullback, and then we get our crossover, right? So here in this case, what we're trying to do here is, if the market makes an impulsive move, it makes a pullback, we want to see a crossover on the pullback, and this crossover should be on the lower side of the stochastic, and then we expect prices to continue the trend that we already have. So to do this, that's where we put the moving average, and also we put what we have here is the stochastic. So that's when we buy and expect prices to go to the upside. In this case, it was a quick winner. So let me show you how we find another winning trade. So here in this case right here, let me do this so that you can really see what I'm doing. Right here we have this market right here. Number one, first of all, you need to see this is the 50 period moving average. This is the 21 period moving average. We want to see this in this order to confirm the downtrend. Since we are in a downtrend, and since we have this 50 period moving average above the 21 period moving average, and also the stochastic is overbought, so we are expecting prices to drop from any point right here. So how do we place our trades right here? We wait for the crossover on the stochastic, right? So if I do this, and if I come to the stochastic right here, I will say we are waiting for a crossover of these two lines right here of the stochastic. We are waiting for a crossover. If you can't see this correctly, make sure you increase your quality on the video, because this video are compressed so that we don't eat up much of your data. So you can't watch them on a lower quality, right? So once we have this, we can see that the next thing we are expecting right here is the crossover on the stochastic, which happens right at this point right here. What do you see now? You see the stochastic crossing over at this candle right here. So what do I do if I was to trade this right now? I will just go to my trading and then place my sell order right here, put my stop loss on the highest point right here. So in this case, you can see, so I'll sell here, I'll put my stop loss above here, and then my take profit should be, if I do this, you're going to see my take profit should be on the lowest point right here. right? So once I do this, the next thing, if I click play here, and you're going to see the market is going, most of the time it's gonna likely move in your direction. This strategy works really weak. Sometimes it's not gonna go as you plan, but most of the time you are going to make profits with this strategy. So let's keep moving and see what happens next. As you can see right here, if you can look at this, you can see the market almost went to hit your take profits, but didn't actually reach your take profit right there. So if you look at this, you're going to see that the market almost went on to hit your take profit, just a little bit distance, and then it came the way or to almost again hit your stop loss, right? So this is what happens sometimes of the time. I'm not here to show you only winning possibilities in the market. I also show you some of the bad times when the market is not moving as you expect, because in trading you need to understand that we have the winning chances and the losing chances. So my goal here is to be as transparent as possible, so that I don't have you expecting to win almost all the time right here. But I just have some examples that I have that are winning examples also. Let me go ahead and show you those examples, and then I'll show you when to buy, when to sell, and how you make your profits. So let's go ahead. Okay, let's look at this example right here. You can see, first of all, we want to look at our moving averages to look for the trend. First of all, this is the 50 and this is the 21 EMA. So what does this mean? This means we are in a strong uptrend, and what is happening on the stochastic is going on the oversold. So we are expecting a bounce, so which means we are expecting this market to move to the upside, right? So what we are going to do right here is expecting prices to go to the upside, but we are just waiting for the crossover on the stochastic for us to buy, right? So what we are doing here is, let's see what happens next in the market. You can see that here we have our crossover right here, right? So I'll zoom this in so that you can see this. We have our market right here, and also we have our crossover happening at that point right here. So once we see the crossover here below, the market moved below, and then a crossover is happening, we just go here, put a long position, buy, put our stop loss below this point right here, and our take profit on our previous level right here. So make sure you put it just a little bit below the level, and then this is 1:1 to 1.4 risk to reward ratio. And then the next thing that you see is the market moving directly in your direction, and then you would make profits on this trade right here, on this candle right here. This is exactly how you place your winning trade right here. So let me go ahead and show you one last example so that you can really understand how this works, because this is a good strategy and I've been using it, and I want you to make money with this strategy. Right now we have, first of all, we have the market. This is the 21 EMA and this is the 50 in their order, which means we are in an uptrend. So what we are waiting for here is for the market to come below this point right here, which is the 25 level, to be in an oversold, and then we're expecting a bounce. So let's see what happens next in this case right here. Pay attention to this point. You can see that the stochastic have now gone below the 25 level, which is an oversold, so expecting a bounce, but we can't buy until we see a crossover of this blue line and this orange line right here. So let's move on and see if we get a crossover. Right now we get a crossover on this point right here. So what do you do as a trader is to buy. So I would buy right here. So to buy right here, let me just do this. Let me just put this on visual order, and I'm using visual order simply because it makes it easier for me to show you these things. But you can use MetaTrader, any chart that you can use it with this one right here. So as you can see right now, we have our trade right here, and we are expecting prices to go to the upside. Your stop loss is below this lowest point of this reversal, and your take profit is going to be towards the highest point that caused that reversal right there. And let's see what happens next. We are expecting prices to go up, and as you can see, prices went up a little bit, right? Came back below this oversold. Most traders would panic here and then exit. Do not exit your trades until it hits your take profits or your stop losses. As you can see, very soon after that, the market went on to win, and then if I keep moving, you can see the market even went further to go to the upside at this point right here. So this was a good winning trade right here. If you want to learn how to become profitable in the market in 30 days, make sure to check out the first link in the description so that you can come to my website and I'll give you a free course that is going to help you to become profitable in the next 30 days without a mentor, without begging anyone to teach you how to trade. Thank you for watching, and I'll see you in the website.